Today, we're going to analyze how capitalization entries are made in companies. To do this, we're going to solve a business case where we need to generate our own capitalization entries. I highly suggest you watch the previous video to get a summary of the details of the case, but on a high level, we have transactional data for the expenses, and using the information in the index tab, we need to identify which transactions are subjected to capitalization. We are to use the GLs provided over here, and then set up our own capitalization entries for the period of June 2024 and retroactively for a new project. We're also provided historical capitalization entries for reference, and we can see that for the capitalization process, we have to reverse the income statement impact by crediting the capitalization expense account and then debiting the capitalization asset account. Given this information, let's begin solving the case. The very first step that we have to take is to identify which transactions in the income statement are subjected to capitalization. To do this, we need to assess the cost center that are related to investments and assess the projects that are capitalized. Let's take a simple approach and break this information down into two different columns. The first column is going to be labeled investment, and the second column is going to be called capitalized project. The way we're going to assess this is to first, for the investments, if XLOOKUP the cost center equals investment, I want to return the word investment, otherwise blank. A very simple approach. And for capitalized project, I'm going to XLOOKUP the project from here and return the capitalization status. You can see that 3 of the projects that are capitalized are labeled capitalized. The one project that's not capitalized is labeled not capitalized, and then the one that was recently evaluated to be capitalized is labeled new. Just because these two have different wording conventions, I am going to formulate my entry where if equals not capitalized, I want to just return empty, otherwise capitalized. So this will exclude that one project where it was labeled not capitalized. And then lastly, for the capitalization status, which is the most important, where if and the investment equals investment and the capitalized project equals capitalized, then I want to return the text capitalized, otherwise empty. And we now have all the transactions that are subjected to capitalization. However, we know that we only need to capitalize for June 2024 and retroactively for that one specific project. And all of our entries go back to the beginning of January 2024, where we can see in the historical capitalization tab, we've already capitalized for all the entries prior to June. So I also need to filter out for the entries that have already been capitalized. So I'm going to create a new column called relevance, where I want to tag all the transactions that need to be capitalized as relevance. And first, I also need to return the period. And for the period, it's going to be a simple month of B5 and year of B5. So now we have a unique combination of the month and the year. Within the index tab, I'm also actually going to create one more item here. I'm going to call this period. I'm going to type June 30, 2024, because that is the period that we're analyzing right now. And then right under it, let's call this period index and just use the month and year function. So now we have the period index as well. And for the relevance, we're going to first set up if the period equals the period we're analyzing, then we want to return relevant, otherwise empty. Now, the one thing that we have to be a little bit careful about is that We know that the infrastructure development project has recently been reevaluated to be capitalizable. So even all the entries that are prior to June, which is a retroactive adjustment, we need to make capitalization entries if the project is capitalized and it's for infrastructure development. So I'm going to add a clause to this formula where if or E5 equals infrastructure development or N5 equals the period, then I want to return relevant, otherwise empty. And now that we have all the transactions that are subjected to capitalization and all the entries that are relevant, we can just set up one last finalized capitalization to fully consolidate all the entries that are subjected to capitalization. So if and capitalization status equals capitalized and the relevance equals relevant, then I want to return capitalized, otherwise empty. Now that we know which transactions are subjected to capitalization, we can then begin setting up our adjustment entries over here. If we take a look at the CSV capitalization tab, we can see the format of how we want to upload. And it's the exact same format that we have provided in the transaction data tab. So I'm just going to copy this over here. And here I'm going to call this capitalization expense. And right beside it, I'm also going to create a capitalization asset because we need to make two entries for each of the transaction that needs to be capitalized. We need to first credit the expense side and then debit the asset side. So for the capitalization expense, what we first need to do is under the index tab, let's create a new table where we consolidate all the GL accounts together. So we're going to take this, paste it over here, take the capitalization account and paste it over here, and then take the asset account and paste it over here. So we know that for all the salary expense, it needs to be credited in the salary capitalization entry and then debited in the capitalized salary entry. Now for the posting period, I'm going to specify the last day of the current reporting period, because when we are reporting adjustment entries, all we need is to have that entry within the reporting period. And what I'm actually going to do here is if the finalized capitalization equals capitalized, then I want to return the period, otherwise blank. And this is to ensure that we only capture data relevant to our capitalization process. For the division, if it equals capitalized, return the division over here, otherwise empty. Account, I'm going to XLOOKUP the account here, return the expense account here, and then the project, we're just going to return the project reported here. And then lastly, for the debit and credit, we only care about the credit side for the capitalization expense entry. So I'm just going to reference the debit amount over here. And then amount, to be honest, we don't really care. So I'm actually just going to remove that. And then when I copy this formula down, I will have all the necessary entries for my capitalization on the expense side. The asset side is pretty similar as well. We know that the posting period, division, and the projects are all going to be the same. However, for the account, rather than capitalization accounts, I need to return asset accounts. And then rather than credit, I need it to return the debit. So when I copy this forward, I now have all my capitalization asset entries as well. So one last thing I'm going to do here is then create an index where if the finalized capitalization equals capitalized, I want to concat all the data up until the project. And same thing on this side as well. I'm going to concat from AA to AD. And now I have the unique IDs for all my capitalization, expense, and the asset. Now to set up our CSV entries, I'm going to add a column and call this unique index. And what we're going to do is we're going to filter all the entries over here where the entries are not empty. And we're going to VStack this, where we're going to filter all the asset entries as well that are not empty. And then lastly, to remove any duplicates, we're just going to layer on a unique. And now we have the index of all the entries that we need to make. To bring this data in properly, I'm just going to XLOOKUP the unique index, search the index over here, and then return the division over here. And I'm going to face some errors because some of the unique index is not in column Y, but instead is in column G. So I can, if error, XLOOKUP B5, search up column AG, and then return column AA, T, and S. So for the posting period, I need to return column S actually. And let's just copy this format here. And we can copy all of this data like this. And we're going to SUMIFS the transaction data where the credit amount and the index matches the index that we're analyzing. And we can actually just continue this down. And then we can also do the same thing here, where instead of column Y, we need to reference column AG. So let's change this to AG. And we now have all our capitalization for our expense and our asset. To calculate the amount, we're just going to calculate the difference. It looks like we need to change the formula from this should be AG and then this should be Y. There we go. And let's actually just copy this over back into the aggregate tab. And now that we have the aggregate transactional data that includes the expense and the capitalization, we can then begin analyzing the cost summary. And to make this analysis easy, let's again create a new tagging. We're going to call this first expense and then capitalization. So for the expense, I'm going to countifs the expense account where the expense is the transaction that we're analyzing. And if this equals 1, I want to return the text expense, otherwise empty. And then for the capitalization, I'm going to countifs the capitalization accounts. And if the account is a capitalization account, then I want to return capitalized, otherwise empty. And now I have a way to distinguish general expense accounts and the capitalization accounts. And prior to analyzing the cost, I'm just going to go back to the aggregate data tab and then create a period section as well. I'm just going to end of month, the posting period to the current month. And let's just copy this format here. And that period should now reflect the period headers that we have here. And then to get the gross cost, I'm going to sumifs the amount column, where the project is the project that we're analyzing, expense equals expense, and the period equals the period that we're analyzing. So this will equal this period, and this will equal this project. For the capitalized cost, it's going to be very similar, but instead of expense, we're going to reference the capitalization criteria. So we're just going to change this from column J to column K, and then call this capitalize. We can then calculate the net cost, and to calculate the capitalization rate, we're going to absolute divided by the gross cost, which gets us an average capitalization rate of around 60 to 74%. We can then copy this formula universally everywhere else. Again, billing development is not a capitalizable project. And with this, we have captured the capitalization rate for each project. I hope this video helped you gain insight in how you can automate entries and adjust financial data for your analysis purpose, and how capitalization is generally entered into a financial system so that we can move expense items into assets. This case will be available on my website for you to tackle yourself, and this is very difficult just due to the level of data analysis and formula building skills that you need to solve it. If you have any questions, feel free to let me know. I'm going to keep creating educational content, so follow for more.